Hello, good morning and welcome to today's morning report on Tuesday the 10th of February with me, Rich Perry, market analyst at Handtech Markets. The European trading session has got off to a slightly disappointing start. Actually, in fact, very early on it was pretty much mixed, and now it's taking a little bit of direction to the downside. That's pretty much coming on the back of this general sort of risk aversion that's coming through the markets now. Geopolitical events in Ukraine are starting to weigh again on the markets, having sort of come out of the headlines for a while. It seems as though the Ukrainian situation is blowing up slightly more now. President Putin, for example, is just flexing his muscles once again. There's seem to be military exercises going on around the Ukrainian border. And also yesterday we had Obama in the States, President Obama, talking about the potential for US involvement, whether that be arming the Ukrainian forces or something else. So it seems as though this is back on the agenda once again, and certainly the German economy wouldn't react well in that sort of situation. But we've also got the fact that Greece remains adamant in its anti-austerity stance, and the Greek Prime Minister is talking about rehiring government workers that were laid off, and that goes against the terms of the bailout. So there's several reasons why sentiment is slightly weaker today, and it certainly looks as though that is continuing. Now, Wall Street closed lower yesterday. I'll change that from Friday. That was a mistake. And the S&P 500 was slightly down 0.4% on the day. Asian markets again overnight pretty much mixed. Now the mixed forces of the Asian markets were due to the fact that Chinese inflation came out again weak, and I'll show you that now. Chinese inflation coming out weekly. Sorry, wrong one. Try that one. Chinese inflation dropped 0.8% now. That was below the 1.0% expected and well down from the 1.5 last month. And look how this Chinese inflation is now really beginning to fall away. That's driving the expectation that China is now going to, or the People's Bank of China is now going to have to ease monetary policy further. Citibank, I noticed this morning, is expecting a 25 basis point rate cut. So it looks like that's what the market is sort of betting on, and that's sort of allowing the risk plays such as the Aussie dollar just to find a bit of support, and also Chinese stocks as well finding support overnight. But that's been flipped by the fact that you've got slight bit of weakness in Japan, with stock market down on the Nikkei, down 0.3%, and that's on the back of just slightly stronger yen that we saw overnight as well. In terms of the dollar index, not really sort of being able to continue this strong move that we saw in higher. It's sort of consolidating now at these levels, and that's having impact on several of the forex majors I'll talk about through my report videos. And also that is sort of seeing the gold price slightly consolidate as well. In terms of what we're looking out for today, we've got the UK manufacturing production at 9:30. That's expected just to drop back to 2.0 on the annual year-on-year basis. Sorry, on the year-on-year basis, back to 2.0, and that's with a month-on-month rate of down 0.1% on the month for December. And then into the afternoon, we've got a bit of US data. We've got the US JOLTS, the jobs openings there for the States at 3 o'clock. It's 4.99 million expected there, and that's slightly higher. I noticed that was yesterday. I was looking at the expectations, and it's 4.96. So it certainly seems as though this payrolls report is still just keeping the jobs market fairly buoyant. So that's this afternoon, but that sort of takes me to my chart of the day now, which is the DAX. Now, I'm very interested in what's going on the DAX at the moment, because I spoke to you last week about this key support that came in around 10,800 that was holding up. That was the gap support that has held up, and now we had a sharp move down to the downside yesterday, and that's left another gap, actually 10,767. So that's left that gap there below 10,800, and it seems as though the market was quite intent on falling away. But look at these momentum indicators now. Very slight bearish divergence on the RSI with the two recent highs, MACD lines crossing over bearishly, and also now we're seeing the stochastics have a crossover, and they're giving us a profit-taking signal as well. So it looks like the DAX is giving a few near-term profit-taking signals that you might see a bit of a correction now. Also, in the light of the fact that we've already come up to see this 100% Fibonacci projection target hit, pretty much bang on and then fall away. Now, the fact that we're now backing away from that Fibonacci level suggests theoretically we're going to come back towards the 10,300 area, or 10,290, let's say, which is the 61.8% fib level, because that's the next fib level that is available. So if we break back below that 10,552 key low that we had in late January, then we could easily be seeing a move back towards that 10,290 level. So we could be in the midst of a bit of a near-term technical correction. It wouldn't necessarily be the worst thing in the world, because certainly we had a very strong run, indicators going a little bit overbought on the momentum, so it would just unwind it slightly. But at the moment it certainly looks like we're sort of in the midst of a little bit of a correction, and certainly that support 10,552, which I'll show you here on the intraday hourly chart, is this low here from the 28th. If that is broken, then that would sort of open more of a correction. You've got a minor basis of support around that 10,300 level, but certainly it would be fairly in keeping with a retreat back towards that 61.8% fib level on this projection of that projection to the upside. So I wish you good luck in your trading on the DAX today. If you theoretically again, so I'll just come back to that point. Theoretically again, you've got that gap at 10,800, and if that's not filled, then that is a fairly weak signal actually to the downside. So it looks like that could become a breakaway gap, but certainly if it comes up to fill that 10,800 and then drops away again, that's not particularly positive either. But if it comes back and closes back above 10,800, then that is considered to be a bullish signal. Anyway, I wish you good luck in your trading on DAX today, and I'll speak to you later. Thank you.